Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us on set at MarketSite in the heart of Times Square, we have Dominick. He is the CEO of Bank Director. We're going to focus on how corporate boards are evolving. Thank you so much for joining us at MarketSite. Perfect topic. You got into this business in 1999.
I did.
You've been through the dot-com bubble. You've been through the financial crisis. You've been through Occupy Wall Street, Me Too, all of it.
Seen a few things.
Yeah. The way boards are operating certainly has evolved.
It has. You know, if you think about the role of a board today, it's pretty different than it was when Sarbanes-Oxley was introduced in '02. So you have this real duty of loyalty and duty of care that I think a lot of men and women really take to heart, and they understand in far better terms than even 5 years ago.
Right, and even in the environment that we're operating in right now, geopolitics, the markets, kind of volatile. Q4 of 2018 is kind of not what anyone expected.
You know, and at the board level, it makes it hard because if you're looking to buy another company, you know, that market volatility really, you know, basically puts a damper on what your value or your valuation could be. And so you see boards really struggling with their strategic planning because if you don't know what you're worth today, then how can you think about what you could be in the future?
Right. Let's talk about the composition of the boards, how it works with compensation, how you're attracting talent, how you're retaining talent.
Yep. Well, it's a big challenge, as you can imagine, right now. There's some interesting things that are taking place. So out in California, there's a new law that basically requires companies to have female directors based on the size of the organization. So I think if you're a 5-person board, you need to have at least 1 female director. If you're 6, you have to have 2. There'll be financial penalties should you not comply with this. And while that's an interesting kind of financial approach, I think it's more the collective public, perspective and perception of what you're doing will drive that change.
Is that necessarily a good change? Is it better to have the right people for the job versus meeting a quota? Is that factored into it as well?
Well, I think right now, if you look at the demographics and you just say, what's the representation of females on boards, it's really, really weak.
Right.
And so I think there has to be something that helps bring people up. But this whole idea of diversity, I think people understand and are embracing it. And so it's more than just, do I have enough female directors serving with me? It's what's the composition of the board? Do I have the right experience? Do we have age, changes so that we can have different perspectives given the audiences that we're trying to serve as a business? So I think the whole idea behind the law is a smart and strong one. But again, I think companies are going to follow it not because they're told you're going to get a penalty, but I think they'll be penalized by their constituency if they don't do this.
All right. Now, what are some of the top challenges and opportunities that you're seeing for boards for this year and beyond?
Well, you can't escape cybersecurity. So any board that's not paying attention to their risk appetite and their positioning that they're trying to take really is not doing a good service for the company. So when you think about how digital is transforming so many different industries today, I think you can't escape that cybersecurity concern. So I think most boards put that front and center if you were to ask them what's top of mind.
All right. And what are the opportunities?
Yeah, opportunities, it depends on the industry you're looking at. In the financial sector, there is this constant chatter about consolidation. And so in this period of change, there's going to be opportunities for some smaller banks to become medium-sized, some medium-sized banks to become a little bit bigger. You look at the healthcare space and you think about all the different expectations for data privacy, customer care. Boards can see that as a great opportunity to do something that helps them stand out and differentiate what they're offering, as opposed to just checking a box and saying we're in compliance. And so I think if your board looks at times of chaos and challenge as one that presents real potential opportunities to explore something different, then they're going to be in a good spot.
Well, with boards, they are so crucial because it really does provide the direction of the company, and it really is the reputation of the company. How do you conduct effective board evaluations?
Well, there's 2 schools of thought. You can do individual director assessment. You could look at the board as a whole. There's companies that will come in, they'll assess your effectiveness. You can look at financial performance. You can look at the composition of the board members themselves. But in my experience, boards that are honest with each other, that can say, here's where we're strong, here's where we need to improve. So maybe we don't have the technology skills that we need. So let's recruit a new director who can come on and fill that gap, because we've been honest with what we bring to the table. Those are the ones that seem to do better, because they can also then say, is there an age that we should mandate a retirement? And we don't sneak up on a director that's underperforming. We all hold ourselves to a standard of excellence.
Right, and that'll trickle down to the corporate culture, which is the key.
Sure, and the boards do play such a critical role in setting the cultural mindset and identity of an organization. So we talked about risk. You have to be able to assume certain risks in any business, but you also have to set those codes of conduct, and you have to be able to really incentivize people to act in the best interest of the business. And I think the board strategically sets that.
All right, now what are some of the rewards of board service?
Well, there's personal rewards. A lot of people will join because they have a relationship maybe with the CEO, or they feel that the fabric of the community that they're in could be better served if they're helping a business go. Certainly there's financial upside, depending on the type of board that you're on. All industries operate differently, so there's different compensation plans. But I find a lot of people join the board not because of the financial gain, but because it's intellectual curiosity, or it stimulates their way they can really give back in their business career.
All right, and to wrap up here, what's your outlook for 2019?
We're going into this real period of uncertainty, and so as I think about different industries, I think some of them are better prepared than others. I think if you're talking about the financial sector, having gone through these different shocks that you mentioned earlier, knowing that there's expectations to do things the right way the first time, I think a lot of businesses are well structured to actually weather some economic storms.
Right.
So
yeah.
Hopefully it'll be better.
Because it's going to be challenging trying to put guidance out there when there are a lot of overhangs and different risk events that boards
Sure.
are looking at.
I think a lot of boards are starting to model out an economic recession in June of 2020, if not before then. So they're not going to be caught flat-footed.
Right.
And I think that's the best thing you could do as a board, is that as long as you're prepared and you're paying attention to the critical issues that are in front of you, and you're being honest with what you know and what you need to ask, then you should be okay.
All right, Al, thank you so much for the
Thanks,
insight.
Jill.
It was great having you with us. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.